It's the trader tip of the week, and I'm Chris Vermeulen from thetechnicaltraders.com. Now, if we take a look at the markets from last year and this year, looking at a particular ETF, this ARK Next Generation Internet ETF, you can see we had the COVID crash of last year, and since then, this fund has had dramatic gains going forward. Now, early this year in 2020, we saw the stock market start to struggle a little bit, but these leading sectors definitely took a back seat. In fact, we saw these leading sectors and ETFs plummet almost 40% to the lows. And since then, they have been putting in what looks to be is a stage one accumulation, a basing formation, a plateau, or a launch pad before the next big push higher. Now, if we were to just zoom in on this chart here, we can see that we are getting very close to a full-on breakout in this sector. Now, this is where we see high momentum traders. These are very fast-moving momentum stocks. When this sector fully breaks above this next line here, we could see a very strong rally. Roughly, it'll bring us up to about $180 a share. We can get that just basing that on the recent rally where we had a push, a rally up here. We came down to this low. We can carry that forward. It'll bring us somewhere up to around that 179, 180 level, which is bringing us into this kind of this island top pattern. And if you don't know what an island top is an exhaustion type pattern where price starts running up really quickly, and then it gaps and it creates an island of bars here, more or less, that gets stuck. And then eventually it gaps down. So this is the rest of the chart. So you get this island of bars up here, this cluster. And that is a very, very bearish sign. And that's when we started to correct back down. So that type of pattern will also act as a major resistance area. And 180 is right into the heart of that island. So I'm expecting we're going to see a nice rally here. And what's really nice is we're seeing these sectors, most of the ARK ETFs are breaking out or on the verge of breaking out. The Russell 2000, which are speculative momentum stocks, have also broken to new highs. We're going into the holiday season here for the holiday rally. A lot of things are pointing to higher prices. So I think we are in for a pretty good holiday rally. That being said, one quick tip, extra tip here is to take a look at what the SP 500 has been doing. Typically, after we have a multi-percentage run, multi-week run, we see a 4, 3, 4.5, 2.5, 3.5, 2.5% pullback in the market. These are typical bull market corrections. And if you zoom in on them, they're actually pretty gnarly. They move in a way that in 2 or 5 days, it can lose quite a bit of value. Some of them are very strong gaps and drops to the downside. And those are bull market that's the buck that the bull market gets, trying to get everybody out of this market. Now, if we take a look at this recent run, we are up at this kind of nosebleed level. We've moved pretty far without a correction. So I would anticipate some type of pullback, potentially to the 20-day moving average, potentially even to the 50-day moving average at some point. This 50-day will move up. It's also going to act as a kind of a resistance zone over here. And so over time here, we could see the markets have a bit of a correction before going a whole lot higher. That is your trader tip of the week. Anyways, take care. Bye-bye.